one last question on the market, then we want to get to brighter things like the numbers, because Motilal Oswal has done quite well in the quarter gone by. But the last point, sir, what is your assessment of domestic liquidity, what the HNIs are thinking and what they're feeling right now? Because if the foreigners decide to sell, is there any cushion within the HNI and the DII fraternity to absorb this kind of sale? Otherwise, we might look at a scenario of straight away down to 5,200, 5,000. I mean, who knows where this might go?
See, you are right. I think, see, the domestic institutional investors, they don't have so much liquidity, although in the last quarter insurance gets lots of money. So right now it's happening that insurance is buying and the foreigners are selling. Domestic institutional investors like mutual funds, they don't have much inflows, and retail investors, in any case, they follow the herd. So if FIIs or the foreign investors are really selling in a big way, definitely we can see some serious corrections. But let's really have in mind that the same people were quite optimistic and bullish, so they are not going to really sell it at any price. Right now, it's the small amount of selling is resulting into higher amount of corrections. But my sense is that the more the market falls, it becomes much more attractive for long-term investors. And there are a lot of long-only funds which are buying in small quantity. So definitely market is becoming attractive for long-term investors, although in short-term equity markets always keeps on giving a lot of pains, which we don't like, but we have to face it.
Right, sir. So let's get to the numbers now. And this last quarter seems to have been very, very good for different parts of the business. Motilal Oswal net profits up 27%, revenues up 7%, and your margins have improved in a very handsome manner over Q2. So what's gone into the quarter? Because this was the quarter when the market actually started correcting.
Right. I think if you look at October, November months were quite good. December we saw some kind of slowdown. So overall market activity was also good, although at our end our business model is separately a bit different than other players. Our business model is much more kind of on retail side it is much more franchise centric model. On institutional side I think the business has done well. Our investment banking business, in terms of numbers, we have not done well. Although the business is quite, I think, good there because of a couple of transactions which we have completed and sizable transactions. The revenue booking has not happened in last quarter because of certain regulatory approvals being sought after. So I would be quite, although the numbers are good, but next quarter I can see very much higher performance on investment banking firm. So overall, I think we remain quite satisfied on overall numbers, although the market conditions were slightly tougher.
Okay, but you say that this kind of growth can be maintained in the next quarter as well, and the margins right now, as I see them, Mr. Oswal, they stand close to 40%. Is this a bit of a super normal margin, or is this a sustainable margin?
I think it is quite sustainable. If you look at, I think the margins in last all the 8 to 10 quarters, our margins at EBITDA levels are anywhere between 35 to 43, 44%, and that is because of our supreme business model, as I said, where it's quite costs are quite variable based on the size of the activity. And I think if the market conditions are stable, right now, of course, the market conditions are slightly adverse than what we are seeing in the previous quarter. But my sense is that I think the earning momentum is there, and once we see slightly better control on the inflation, the government also will come and try to, I think, keep the interest rate low, because this kind of interest rates are crazy in this kind of globalized world. But we are facing this problem of inflation where definitely the government has to take some actions. But look at the kind of savings being generated in the system. In the worst case scenario, we have done about 8%, 8.5% GDP growth. So we have no doubt about the India story being stronger, not only in the last 5 years, but next 5 years are going to be equally exciting. So I would be quite optimistic on that front, and our business is directly related to the kind of, I think, growth in the economy. Financial services as a business has always done better than the nominal GDP growth. So I would be, I think, quite optimistic for next couple of years, not quarters, because quarter on quarter is very difficult. But I would be quite optimistic for next, I think, 3 to 5 years for the Indian economy as well as the BFSI sector.